Welcome to your daily 5 minutes market brief with JPMorgan and Luna. Today is August 24th, 2025. I am Luna.
I am JPMorgan. The biggest news has to be Fed Chair Jerome Powell out of Jackson Hole. He sounded, well, surprisingly dovish, didn't he?
He really did. Most people were braced for something maybe a bit more cautious.
Right. So what did he signal? Why the big reaction?
Well, essentially, Powell opened the door much wider to cutting interest rates, maybe even, as early as September.
Okay. And dovish just means, for anyone needing a quick reminder.
It means signaling a more relaxed approach, less worried about inflation right now, more willing to ease policy to support growth. And what was really striking was how fast the market odds shifted, the chance of a September rate cut. It jumped from around 75% to nearly 90%.
90%. Almost instantly.
Almost instantly, yeah. It
Right.
shows a real pivot towards expecting easier money.
And you certainly saw that reflected in the markets. I mean, U.S. stocks just roared higher.
Oh, absolutely. It was like rocket fuel for equities.
The Dow jumped, what, 1.9%? A record high close.
Yep, a record. And the S&P 500 was up 1.5%. Nasdaq surged 1.9% too.
Led by those rate-sensitive tech and growth stocks, right?
Right.
They love the idea of lower borrowing costs.
Exactly. And it wasn't just the big names. Even the Russell 2000, the small caps, climbed almost 4%. That signals, broader confidence, a better risk appetite overall.
So that optimism, that expectation of lower rates, it rippled out, didn't it? What happened with bonds and the dollar?
Right. So shorter-term Treasury yields, like the two-year note, they fell pretty sharply, dipped below 3.7%.
Less return needed if rates are expected to fall. Makes sense.
Precisely. And the U.S. dollar index, it slid, fell below the 98 level, ended near 97.7.
And a weaker dollar tends to boost.
Commodities, generally. And we saw that. Gold jumped over 1% to about $4,418 an ounce. Oil, specifically U.S. crude, settled higher too, around $63.77 barrel.
Interesting. And even things like Bitcoin.
Yeah, even crypto like Bitcoin seemed to benefit, stayed trading near its record highs. Lower rates often push investors towards assets perceived as higher yielding or perhaps inflation hedges.
Okay, so the Fed was the big story, obviously. But there was other significant stuff happening, maybe a bit more under the radar.
Definitely. Here's where it gets really interesting, I think. The U.S. government took a 9.9% equity stake in Intel.
Wait, an equity stake, not just funding.
Exactly. They converted about $10 billion from the 𝗠cie heç𝗲𝘆𝘆 Act funding directly into Intel shares. That's pretty unprecedented.
Wow. How did Intel stock react?
Jumped about 5.5% intraday on the news. It's a huge signal, right? Massive government backing for the semiconductor sector. But more than that, it's the government literally getting skin in the game. It aligns their interests with Intel's success long term. Could be a new model.
Fascinating. Okay, shifting gears slightly, you mentioned oil prices earlier. They also saw a notable surge. What was behind that?
Well, a couple things. Firstly, any lingering hopes for a quick Russia-Ukraine peace deal seemed to fade, putting supply risks back in focus. And secondly, we got a surprise drawdown in U.S. crude stockpiles, about 6 million barrels lower than expected.
Meaning tighter supply than anticipated.
Right. Which is good for energy sector profits, obviously, but it does kind of rekindle those inflation worries the Fed is watching.
Always a balancing act. And what about across the pond? How's the European economy looking?
Actually, some surprisingly positive news there. The euro area's manufacturing PMI, that's the Purchasing Managers Index, it jumped to 50.5.
Okay, and over 50 means expansion.
Exactly. First time it's been in expansion territory in over 2 years. So that suggests stronger fundamentals might be building in the Eurozone.
But not everywhere. What about the UK?
The UK was more mixed. Services PMI looks strong, up at 53.6, but manufacturing actually contracted further, down to 47.3.
Mixed signals then. How does that affect central banks like the ECB?
Well, it complicates things. The ECB is sort of hinting they'll likely pause rate hikes in September, but these numbers might mean discussions about potential cuts could restart by October, depending on how the data evolves.
Right. So bringing it all together, we've got a dovish Fed pivot fueling market optimism, this really surprising government intervention in Intel, and a global picture that's, well, mixed, but maybe leaning slightly more positive, especially in Europe.
That sums it up pretty well. Lots of moving parts.
So what does this all mean for you, the listener?
Well, it raises a really important question, I think. This whole market rally we're seeing, it's largely built on expecting the Fed to cut rates soon. But what if? What if the upcoming U.S. data, like next week's jobs report or new inflation numbers, comes in hotter than expected?
Could the Fed delay?
Exactly. Could they push back the easing? And if they did, how would markets react, especially those rate-sensitive sectors and maybe even crypto? That's something to keep in mind.
Definitely something to watch closely. It is absolutely a dynamic environment. Thank you for joining us for this deep dive. Stay informed.
Thanks for listening. We'll catch you next time.
You've seen the headlines, but what really moves your portfolio? Money.ai scans 1.3 million signals a day, earnings, sentiment, macro shifts, and turns it into one personalized briefing focused on your holdings. No noise, no guesswork, just what matters. Money.ai, know what moves your money.